Tuesday, March 15th, 2022, Maneco 64, home of alternative economics and contrarian views. So yes, I am in Switzerland. It's not a very nice day today. It's rainy. But yesterday when I arrived, it was a beautiful day. I actually met one of the followers of the channel in Zurich. He was very nice, took me for lunch at his place, and then dropped me at the train station, and I came up on the train to where my sisters and my mother live. And so I didn't follow things too much yesterday, but I noticed that the bond markets seem to be screaming trouble for the whole financial system at the moment. It seems like there's a bit of a liquidity crunch. Yesterday, everything went down except, I guess, cash. And by that, I mean fiat cash. Gold and silver got hit hard. Gold and silver are getting hit hard again this morning. Am I concerned? No, because ultimately that will be the only place to be in terms of savings, monetary savings. I will reiterate that cash, fiat cash in the bank, always loses value in the long run. But what I think we're seeing right now is a lot of, could be some liquidation, some margin calls. I saw yesterday as well that there's problems in China. And by problems, I do this. They're locking down Shenzhen in China, which is like the Silicon Valley of China, I would say. A big city that used to be very small about 30 years ago. It was a backwater. So that's significant, I think. Something's going on there. Of course, the situation in Ukraine is not been solved yet. And we're hearing now that the Chinese, the West at least is claiming the Chinese are trying to help the Russians. So things are very, very uncertain, I would say. And but we're going to focus today on the bond market, especially the U.S. Treasury market, because I noticed as well the stock market didn't do very well yesterday. The NASDAQ finished down quite a bit, even though the other indices were pretty much unchanged. You would expect bond markets to rally, and we haven't seen this year. And the 10-year yield broke through decisively through 2%. And I think we are at a critical juncture long term in bond prices and bond yields. And of course, tomorrow we've got the FOMC meeting. We've got the Federal Reserve expected to raise rates by 25 basis points. But can they really keep this pace of raising rates this year? I don't think so. I think the economies are unraveling all around the world. And even though I think there's some positive Chinese numbers today, I wouldn't put too much into it. But I saw an article in the FT this morning. I read it. The FT is already trying to put doubts on whether central banks in the West need to tighten that much further, even though I think we're going to continue to see, of course, rising prices. And my video from yesterday, which I made on Sunday, talking about the rebalancing, the flow of assets from paper assets, stocks and bonds, to hard assets, commodities, is going to continue. Yes, we've seen a massive correction in commodities, especially in oil, and we're going to go through that in a minute. But as I've said many times, things don't happen in a straight line. So I think what we're seeing could be maybe similar to what happened in March 2020. It could be. I know gold and silver dropped quite a bit back then. Gold dropped from 1,700 or so down to 1,450. Silver dropped all the way down to just below 12. But we're already dropping now. Gold went up to like 2070 a week or so ago, and now we're around 1930. So we could be in the middle of one of those major crunches. And historically, of course, central banks react with what they know how to do, more and more liquidity. And that's a problem right now because they're supposed to be draining the liquidity. So things are very uncertain. That's all I can say right now. I know it's not much help, but my experience yesterday was very good. Graham Hobbs, who's a follower here, he's always said that this is a community. And I saw yesterday that it is. It was really nice to meet, well, his name is Jörg in Zurich, and his wife, and we had a nice lunch at their place. And I mean, I know Zurich, and it's not difficult to get around, but if you have someone taking you around, driving you around is much nicer. So that's part of things right now, I think, as well. We need to think of community. And I know I don't live in Zurich, but if we're going to travel around and you know people everywhere, that's a good thing. So let's quickly look at where the markets are then this morning. So usually Switzerland is 6 hours ahead of the US, but the US changed their clocks this Sunday. And Europe only changes it on the 27th. So actually, I'm only 5 hours ahead, which suits because that's usually how far ahead I am in London. So it's interesting that this week I'm going to be 5 hours ahead here in Switzerland. So it's 8:02 a.m. Swiss time. So we've got spot gold down $23. Am I concerned? No. As I've said many times, and how Mike from the Rethinking the Dollar always says, get your weight up. That's what we have to worry about, getting our weight up while we still can. So yes, we're at 1927. Low's been 1924.71. So I think a few weeks ago when we broke through this key level, 1920, and why is it key level? Well, because it was the high in 2011. And whenever you break through these kinds of levels, you can see a major acceleration in the price. And that's what we saw. But a lot of times in markets, they correct to retest the breakout. And that's what we're seeing. Is there manipulation? Maybe, but I think we need to forget about that. We need to focus on stacking and making people aware of what's going on. Try to explain to them what gold and silver really are. And that's how we're going to defeat the bankers, because they don't want people to use sound money. They want to keep lending to us. They want us to stay in debt and keep using their fiat currency that really doesn't hold its value over time. So yeah, the high overnight has been 1956, so it's very volatile. We could very well turn around very quickly. Who knows? And tomorrow with the FOMC decision, it could mark a turning point for gold. It could mark the end of the correction, but I don't know. Usually that happens during FOMC meetings. Silver is down 33 cents, just over 1% at 24.70. The low has been 24.59, the high 25.13. The Dow future is down 120 points at 32,830. NASDAQ is down 23. S&P is down 13. So the stock market's having a tough time as well. It seems like everything has been sold off right now. To the currencies. We've got sterling up 0.25%, just above 130, 130.35. We've got the euro up a third as well, 109.73. The dollar is unchanged versus the yen, 118.25. It's pretty strong dollar yen though. And I'll look at the Swiss franc. The dollar is up 0.2% versus the Swiss franc at 94.03. So yeah, the dollar seems quite strong against the Swiss franc. It's the highest it's been, let's see, since April 2021. So that's quite interesting that the dollar is strengthening against the Swiss franc. The dollar is unchanged versus the yuan at 639.80, but I've noticed that we've seen quite a strong rally here in the dollar versus the yuan. I think the last time I covered this FX pair, we were around 633. So this could be to do with what's happening in Shenzhen. So is this another kind of Wuhan, and is this going to bring us another crisis? Who knows? There's definitely a lot going on, I have to say. So to the other FX pairs, Aussie dollar down 0.1% at 71.79. The US dollar is up 0.2 versus the Canadian dollar, 128.45. And the Kiwi dollar is down about 0.15, 67.34. To the commodities, crude oil WTI is down 5%. So we're back up below 100. Is that it? Is it over the bull market in crude, the bull market in commodities? I don't think so. I don't think anything has changed. This is a counter trend. How can I say correction? Short term. But we are at 96.10 WTI crude, down over $5. Brent is at 99.20, down almost $6. High grade copper down 0.5% at 450. So that's down significantly as well from the recent highs. And now let's quickly have a look at the bond market. So yesterday, just going to show you this. I did a screenshot of what happened yesterday to the bond market. The whole yield curve pretty much rose a lot. Yields rose, bond prices fell, of course. So the 30-year was up 11 basis points. The 10-year was up 13.4. The 5-year was up the same. The 2-year was up 11.3 basis points. That's pretty big move. Even the 6-month T-bill rate was up 6.5%. So that's not good. And this chart here, this is a long-term chart of the 10-year future going back to the early 80s. And I've been looking at this trend line for a while and this chart, and we're right on support here. Yes, we could go a bit lower like we did in 2018 and still be on an upward trend line, but I think it bears watching the bond market. If it becomes very volatile, that's a bad sign. That's what happened in March of 2020. It was one of the reasons why the Federal Reserve had to intervene the way they did. Not only was the bond market, Treasury market, but all other bond markets very volatile. There's very little liquidity. What does that mean? Well, that means that the institutions that make markets for investors in these securities, they were unwilling to do so. First, because they probably didn't trust financial health of the counterparties, and also they didn't trust the price of these things. And this is where we could be right now. And do you really want to get rid of something that's been around for thousands of years, that has held its value, and you can hold it outside this crazy system? And by that, I mean gold and silver. No, you don't want to get rid of that. This is the time where you need to hold on. It's not going to be easy. And I've said that many times. You got to hold on to that bull in gold and silver and even hard assets, I would say. So this morning, the 10-year yield has dropped back a little bit. It's down about 2 basis points, just below 212. So there you go. I'm going to end it here today. I do have some special things coming up this week. Yes, even though I'm on a holiday, I have a great interview coming up that I'm doing tomorrow. I'll probably publish it Thursday or Friday. I'm not going to say who it is, but I think you will enjoy it. And yeah, tomorrow's supposed to be nicer. I'm here in a hotel because my sister and my brother-in-law, they own a hotel and they run a hotel as well. I'm staying in the one that they run for a friend of my brother-in-law. And it's a very nice small hotel. And yeah, I've had my breakfast already. And now I'm gonna, yes, probably go out with my mother, help her do some shopping today. She's 85. Anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.